Well, good morning and happy Tuesday. My days are all messed up. I hope everybody had a great 4th of July weekend. I know I did. I took off and drove to El Paso to visit some great friends of mine and another friend that came down from Denver. And we've all known each other well over 50 years, so we had an absolute blast. I have the sunburn to prove it. And the drive across the desert in New Mexico on my way down there Friday was amazing. Thunder clouds everywhere, and you could see these rainstorms just happening at all these different spots in little narrow funnels. And I was convinced I was going to drive into a tornado. And at one point, I'm right in the middle on I-10 on this horrific rainstorm, and 3 semi trucks pulled off to the side of the road. And I thought, they got CB radios. They probably know something I don't. So I pulled over with them and I waited about 15 minutes and then ventured back into traffic. But boy, it was rough, but it was kind of fun. So I got the first question of the day here coming up. I want to go ahead and address it right away. And it says, just a fun question. By any chance, do your YouTube viewer counts stats act as leading indicators to track actual buyer demand? Short answer is no. YouTube stats all depend on the channel. And really, when you're on YouTube, sometimes you're just looking for videos that validate what you think. So if you think the real estate market's going to crash, you're going to gravitate towards those videos that give you convincing data that tells you that's what's going to happen. If you think real estate's going to go up, you're going to go there. You're going to go to more established YouTubers that have been around for a while, not necessarily the new channels like mine. You're going to look at the thumbnail, and if the thumbnail has a good topic on it, you're going to click on it. So really nothing to glean when it comes there. So the purpose of this channel is to just look at the local data, compare it nationally, see if we can spot a trend, chat about it. Some numbers come out and we can tell you exactly what that means. Other ones we just have to look and go, well, we're going to have to wait and see what that means. And so I'm not trying to promote a crash. I'm not trying to promote to sell you more homes. I just want to get a better understanding of what's going on in the market so we don't get surprised. So we just drive this little bus around the data field and see what happens. So today, after the weekend, now on a holiday weekend, the numbers really don't count. I mean, they always get discombobulated. And this holiday weekend was no different. Everybody headed for the hills. The airport parking lots are full. Campgrounds are full. Freeways are full. Nobody was buying or selling houses. We have 5,859 homes on the market this morning. Seems to be going up about 6 homes, going down about 6 homes an hour. 7-day moving average was 3,768 new listings came up, 3,440 went under contract. That's a difference of 328, and it looks like this. So you can see that you get into the holiday and it just drops off. Remember, this is Memorial Day, same thing, boom. So it drops off. And it gets kind of interesting. I was looking at pending listings here, and they really dropped off. And the contingency listings, though, they went up, a few days ago, and now they're coming back down. So, again, not really anything that we can glean from this data yet, except to say there's still a gap between homes coming up for sale and buyers scooping them up. We do see that, according to CNBC, epic housing shortage may finally be starting to lift. A surprising number of new listings hit the market in June. So I'm going to chat a little bit about that because this is very regional. When we look at the Arizona market, we have a lot of jobs coming to Arizona. So are we going to see a major slowdown, or are we just going to see a brief period because it's summer? Are builders able to catch up because lumber prices are coming down now? As lumber prices went up, a lot of builders just poured the cement pad and said, I'm just going to wait till lumber prices come down and then jump back in. Are they going to lower prices? Nope. I don't see that happening. When you look at bubble talk, and, there could be a bubble, don't know, but there has to be components for a bubble. And I saw something by Harry Habib yesterday, and I follow him quite a bit. And he says sales are not slowing because the market's bad. It's slowing because there's nothing out there. In other words, the buyer counts that you see are you just can't find a home. Can't find a home for a couple of reasons. One, there aren't any listed. And two, if they are, they're too expensive. But the definition of a bubble is too much supply, not enough demand. That's a definition for all bubbles, not just real estate. There's too much supply, not enough demand. I'm going to show some charts to back that up. But here's where we're at today. Comparing historically, 3.7 million homes were for sale in 2007 before the big crash. We only have a little over 1 million homes today. We have 12 million more households and 3 million less homes just because of the generational gap. The millennials are coming up. It's going to be about 48 million of them ready to buy a home. In 2009, 26% of homes owed more than the value of the home. Today, it's less than 2%. That's an important number to keep in mind. So everybody's talking about, these homes. They might have to sell their homes, and we're going to have a crash, and there's going to be foreclosures. Well, there's only 2% of home buyers that are upside down on their mortgage. So it's much easier for them to sell it than it is to hand it back to the bank. Mortgage rates are helping us. They haven't popped up yet. Today they're at 3.16 national average. Yesterday, which means Friday, was at 3.18. Those will adjust a little bit today. They're going down, tick, 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 ever so slowly. But there's some Federal Reserve minutes that are going to come out this week, which may change that. Mortgage servicers are bracing for, I just kind of want to read the bottom line here. That mortgage servicers are bracing for fallout as COVID bailout comes to the end. After reading all of this, I come down to the bottom. And it says, while an improving economy should help more borrowers to become current again on their payments, no one denies there'll be a foreclosures in the fall and winter, as some troubled borrowers simply have no other recourse. While it's difficult to predict how many, it'll be nothing like the crisis a decade ago when more than 11 million homes entered the foreclosure process. When you look at the tools we have today and the ease of coming off a forbearance plan, I think it's just so much simpler than what we saw in the past, says Bray. What he's saying is that, A, there aren't as many homes out there that are going to hit the market. We're going to look at a chart and show you what the difference is for Arizona. And B, the banks are working feverishly to get this done. So they are adding staff. They're adding different products. They're willing to extend your mortgage to a 40-year note if you need to. They're willing to adjust your interest rates. They're willing to pull out all the stops, keep you from having to sell it back to the bank. And they may be advising some of these people, why don't you just sell it? You've got enough equity. Why don't you sell that home? That's the best way to catch up on your payments. So we're going to watch it. We don't have to watch it very long because the moratorium is ending soon, the forbearance plans. So now the Cromford report come out, and they said one of the leading indicators that they like to look at is the listing success rate. And the listing success rate right now is dropping. That means you put your home on the market. Did you sell it or did you not sell it? So it has a success rate up here of, I believe that's 93%, which is still pretty doggone good. You go down and compare it to 2015, right? So where it was hovering around the 60s. So I want to look at it historically. So a listing success rate that starts dropping means that there's more inventory coming on the market. There's less buyers. Tyler has a question here. He says, is that local or national? That is national, Tyler. Thanks for the question. Here's historical data on the listing success rate. Right here in 2005, 87%. It's kind of where we are now, right? 87%, we're roughly about 93. And then it plummeted to 57% by the next year of February in 2006. So from April, so it's almost a year to go down to 57%. Then you can see at the very bottom here in 2008 in December, the listing success rate was 21%. Extremely difficult to sell a house. There was a crash. Nobody could get financing. There was so much supply of homes. So now you can see where our listing success rate is now, and it's turning down, but it goes up, down, up, down. It's turning down a little bit. But the other thing to compare to is when you see this drop, this listing success rate, what's the main driver for making that drop? And it's this. It's new listings. It's inventory. So today, look at this. This is new listings year to date, 59,000. New listings, 103,000, more than twice as many new listings back in 2006, all the way up to 171,000, down to 142,000, so that you can see that you're not going to get a lower listing success rate without getting higher inventory. So all of those other factors that are out there, we have jobs coming, interest rates may change, we may see some tightening by the banks, or we may see kind of a perfect storm to where in the fall, we might see inventory up enough and buyer traffic at a level where the crazy bidding wars are not going to go on, and maybe the buyers will start coming back into the market again. So this may be a bit of a yo-yo. And so, but the only thing that's going to tell us where we're headed is the difference between supply and demand. All of the other things matter, but if they don't change that number, nothing changes. And the thing that we see is that inventory is changing ever so slowly. What stuck out to me this week was that, there was just no buyers out there at all. And we're looking at only 3,768 homes come on the market this week. So that dropped considerably by about 500 homes. I'm just going to tack that up to being the 4th of July. We have a question. Has the trend of sales price to list ratio changed? Are homes still selling over listing price? Or is there a downward trend as of recent? It's still the same. Homes over list. I'll see if I can pull it up here for you, but that's still going on. It takes a while for sellers to figure this out. What we are seeing that's really sticking out is the shooting for the moon pricing. Oh, I think let's put this on the market. I think I can get 600,000. Realtor spends the money for the photography, gets everything all set up to go, puts the lockbox on, orders a sign. 3 weeks later, the seller goes, "Oh, that didn't work. Take it off the market." Poor agent. So I'm going to look up here average. Let's see. Let me jump over to this next screen here for you. See if I can't answer that question. Closings over list price. We were at about 60%. We're still at 60%. So that has not changed one iota. And you can see that the 400, 500,000 range is still about 20,000, 22,000. That's going to change ever so slowly. And so the first thing we're going to see, if inventory continues to go up, and we're keep watching that to see if that's going to happen. If inventory continues to go up, the first thing that happens is the bidding wars will start to subside. The second thing that'll happen right about the same time is people shooting for the moon are going to have to price realistically. Now, they still may get multiple offers all this summer, just not as many. We already know that open house traffic has dropped dramatically, but, it's summer. Nobody likes looking at homes in Phoenix 114 degrees. And the number of people taking vacations right now is off the charts because everybody's been home for a long time. So this is our first pandemic. So when we're looking at real estate and recovery, we really don't know. We just can't predict. I can look today and tell you what's going to happen next month. I can tell you the prices are going to be higher and that you're still going to get multiple offers and there's still a housing shortage. That's a fact. So that's going to mean that there's an increase in prices. I can say that based on the numbers that they're changing now, about 400 to 500 a month, that if that continues, that maybe by September, we might have a little sweet spot. I think if you're thinking of selling your home and you're not quite sure when to come in, I think if we get up to 7,000 listings, I'd pull the trigger. And here's why. Prices are still going to go up, and you still might have a few bidding wars out there. But when they get up to like 9,000 and 10,000, it's just going to take you longer to sell your home. But not only that, if we do get up to 7,000 listings, I would just kind of take that as a check mark that says we should start getting prepared, because then when you sell your home, you're going to be able to find more choices. So we have another, let's see, what about rental market? Davis asked. It's tough. It's going to continue to be tough. So Donovan, thanks for the super chat. Will the end of the whole forbearance forgiveness at the end of July make any change in the dent in the market? I'm assuming you're meaning both rent and mortgages. And I would say, no, the number's not big enough. The number is absolutely too small to have an impact. If we had all of the available homes that are on forbearance here go into foreclosure in Arizona, it might put us at 18,000 listings, which guess what? That's normal, 18 to 20,000. So it's bad for those people if they lose their home. It's going to barely impact the market. Now, could there be long-term problems with this? There might be, but the number has everybody that's been exiting forbearance right now has been doing it very smoothly, just getting out. And keep in mind, a lot of people just took forbearance because they could. You didn't have to prove hardship. All you had to do was call your lender and go, hey, I'm not able to make my payments. Can you put me in a forbearance plan? There's no interest. It's just a deferment. And you're going to go a year and not make any payments. And you're going to pay off your credit card. You're going to pay off your car. Then you're going to call them up and go, okay, let's redraw the note. And there's like 25% of people that are doing that right now. So they took forbearance because the carrot was out there and they took it. Now the rental moratorium expires at the end of the month. I don't know. I'm going to guess on that one because I think the CFPB came out. That's a Consumer Finance Protection Bureau. And they came out and warned lenders that you better be entering correct data in the system. In other words, if the renter wasn't paying you because it was in forbearance, you better put that in the system correctly. If they were late and they weren't in forbearance or they weren't doing your rental moratorium, you need to enter that. I think these mom and pop lenders and the institutional lenders are just going to say, screw it. I'm just going to mark everybody was on time and move on, because they're going to come after you if they don't think that you put the right information in. I think people are just going to go, did they pay on time? Yeah, click and move on. So it's going to be interesting to watch. Are a whole bunch of people going to end up in the street? We don't know, but we're going to know in 3 weeks, folks. Carlos says, Rick, I have neighbors across the street listed with the same house. The one with the bigger lot is $85,000 less than the more expensive one has sat. So what you're saying is you're seeing somebody shooting for the moon out there and it's just sitting there. Buyers right now are tired of getting beat down and not getting any offers accepted. They're tired of it, but they're also smart enough to recognize when something's grossly overpriced. You know, keep in mind, these buyers have been in the market for a while. They're looking at data. They're looking at houses. They know what the tolerance level is. They know what price they're going to have to bid up to get it. And they're looking at it and going, well, I can't do that, so I'm going to sit on my hands. The other buyers that are still in the market, they know when they see something that's ridiculously priced. And you know what? Nobody gives you a lowball offer anymore. They just drive by your home. Forget it. Because they know that after writing 10 or 15 offers that the seller didn't even give them a counter offer, that they're just not going to play the game. So I think these overpriced homes are going to see that, yeah, they're sitting there. I did have a YouTuber comment while I was gone for the weekend. I didn't really have access to the data, but he said there was a huge jump in canceled listings this last week. It's an interesting number. Why would you cancel? Well, the majority of them would cancel because they tried to get that price and they couldn't. They said, I'm out. So it's going to be a fun summer to watch these numbers. Coming up this week is going to be some data from the Feds, mostly the Fed notes. We'll see if that's going to affect interest rates. I kind of doubt it. Things are going kind of stable. It's going to take us a week and a half to get back to tracking normal numbers after this 4th of July dip, but we'll keep doing it right here. And I'm not going anywhere this week. I will be sticking around. I hope you do too. Have a great rest of the week. Take care.